Should you sell Tesla stock before it's too late? Well, that's the question of this video. Tesla has long been hailed as the leader in the electric vehicle revolution, but recent developments raise serious questions about the company's future and particularly the valuation. With billion-dollar projects like RoboDrivers, Tesla's financial strategy is starting to look risky. So, should you sell Tesla stock before it's too late? Let's find out. Welcome to this valuation masterclass case study. My name is Andrew Stotz, and for 30 years, I've helped thousands of people master company valuation in months, not years. Click the link in the description to join us at the Valuation Masterclass Bootcamp. And while you're there, get this presentation and my exclusive global stock tracker of the top 500 companies for free. In this video, I'm going to share how Tesla's autonomous driving technology could make or break the company, and I'll assess the effectiveness of Tesla's competitive advantage, and I'll evaluate Tesla's potential using my global stock tracker for assessing any company's and any stock's attractiveness. By the way, I was just typing into YouTube about Tesla, and I found this YouTube channel by a guy named Bjorn Nyland. And it was fun to watch him drive a Tesla 3 long-range Highland from Bangkok to his home in the north of Chiang Mai. And given that I'm in Bangkok, that was fascinating. The car worked fine. The charging was a bit of a hassle, but you know, that happens. I wouldn't say it was a deal breaker. I put the link to that video in this description, in the description there. So, what is the company's background? Well, it's a global leader in electric vehicles and renewable energy. Tesla's renowned for its cutting-edge electric vehicles, autonomous driving technology, and clean energy solutions. Of course, the company owes most of its success to Elon Musk, the charismatic CEO, who has become synonymous with Tesla's innovation and bold vision for a sustainable future. Now, 85% of Tesla's $97 billion in revenue that they generated in 2023 came from EVs, regulatory credits, and leasing income. Now, I spent some time going through the different models of EV. Let's put aside the Cybertruck for a moment. But what's clear is that the S and the X model are the past. In fact, production is only about 100,000. So forget about S and X model. In fact, if you look at the future is the 3 and the Y. And between the two of them, expectations are that the company's going to generate about 1.6 million production volume of these cars in the next couple of years. So let's focus again on 3 and Y to understand what's going on. Now, before we go into that a little bit more deeply, a small 6% of revenue comes from solar products and energy storage solutions. The remaining 9% comes from vehicle servicing, insurance, and merchandise. Tesla's demand is largely concentrated in premium markets with high-paying customers, and they're expanding beyond these areas, of course. We've got 47% of revenue coming from the United States, 24% from Europe, 22% from China, and 7% from the rest of the world. Let's look at a Tesla timeline just to make sure we understand the company well. In 2003, Martin Eberhard and Mark Tarpenning founded Tesla Motors in California. In 2004, in fact, in 2003, they were out pitching for money, trying to get money. And in 2004, Elon Musk invested $6 million, becoming the largest shareholder and chairman of the board. Eberhard was ousted as CEO by Musk in 2007, and Musk is now the 4th CEO of the company Tesla. So I think you could argue he wasn't the original founder, but certainly he's operated like a founder for a long time. Now, finally, in 2008, the company launched its first all-electric sports vehicle, which is the sporty Tesla Roadster. And it was based upon at that time a modified Lotus chassis, and it offered an impressive 0 to 60 in under 4 seconds and had a range of about 200 miles. That was really groundbreaking, and it was a great publicity that they got when they launched that way, and a great way to launch at the premium end of the market to show people that EV vehicles can do a lot. Now, in 2010, Tesla went public on NASDAQ, raising $226 million. It was the first car IPO since Ford in 1956. Incredible. In 2010, they launched the sedan Model S and began building its proprietary charging infrastructure. In 2015, Tesla unveiled its Model X, an all-electric SUV featuring signature Falcon wing doors. And then in 2016, Tesla acquired Solar City to integrate solar energy solutions into its portfolio. Now, this acquisition was controversial due to Elon's dual role as Tesla CEO and Solar City's largest shareholder, alongside its founding by his cousins, raising concerns of conflicts of interest. But he managed to pull it off, and the shareholders ended up approving it. In 2017, Tesla opened its first gigafactory focused on battery production, in particular in Nevada. And in 2019, Tesla unveiled its futuristic all-electric Cybertruck, which came into production in 2023. Now, in 2023, also, Tesla made strides in autonomous driving with its robo-taxi vision. And this is where I think it gets interesting, because they have been, and Elon has been pushing this autonomous driving and the robo-taxi for a while now. And it's still a question of whether this can truly be successful. So in this video, I'm going to share how Tesla's autonomous driving technology would make or break the company. I told you that in the beginning. Let's look at that. So Tesla's robo-driving technology aims to revolutionize autonomous transportation. Robo-driving could create a global autonomous ride-hailing network, disrupting traditional transportation models. Tesla projects that robo-taxis could operate at significantly lower costs than human-driven taxis or ride-hailing services. This network is expected to be a high-margin business, generating billions in recurring revenue for Tesla. Sounds exciting. Well, this is not new news in the market. This is in the price, of course. And robo-driving would transition Tesla from a car maker to a tech-driven mobility provider. It could add hundreds of billions to Tesla's valuation, justifying investors' high expectations. Now, for years, Musk has promised full autonomy, but as of 2024, which is right now, December, that I'm recording it, it has yet to deliver any fully self-driving capabilities. Now, this has raised concerns about its credibility due to repeated missed deadlines. And I think when we look at the valuation of this company, we have to come back to ask the question, is this in the price? And I would say this investors have already put this in the price to a certain level. We'll look at valuation later. Now, companies like Waymo and Cruise are making strides in autonomous driving and robo-taxis. And if competitors launch robo-driving networks, well, Tesla could lose their first mover advantage, and it may not make as much as people think. But autonomous driving is heavily regulated, and Tesla has yet to secure full self-driving approval. So accidents and misuse of full self-driving could lead to lawsuits, regulatory pushback, and reputational damage. In fact, it's hard to see the US government allowing full autonomous driving. So this development demands substantial investment in AI research, hardware, and infrastructure like superchargers. Now, I do think you can argue that Tesla is in a better position than almost any other company to do this because of the data they've been collecting and what they've been working on. But still, it's still a question of whether they can maximize the return out of this. If the returns on robo-driving don't materialize quickly, it could strain financial health of Tesla. Probably not too bad because they're net cash company and they're making good money, but it could definitely hit market sentiment. Now, if you're enjoying these insights and want to unlock the secrets of valuation, join my Valuation Masterclass Bootcamp. Whether you're an experienced finance professional or just starting, take your skills to new heights and become a master in company valuation in months instead of years. Don't miss this opportunity. Click the link in the description to learn more and sign up. So let's recap. Tesla, led by Elon Musk, revolutionized the electric vehicle industry. While autonomous driving offers future revenue potential that could be massive, Tesla faces challenges with safety and regulatory concerns. So, what is the company's competitive advantage? Well, Tesla was founded in 2003, and it focuses on solar energy and obviously electric vehicles. No, competitive advantage comes through technological leadership, brand strength, cost efficiency, and first mover position in the EV market. How did they achieve it? Well, they achieved it by investing heavily in R&D, continue innovations, direct to consumer sales, which is one thing that Tesla has that all the other car companies can't compete, because Tesla is basically building to order. Also, the economies of scale from gigafactories and an integrated product and charging system. Meanwhile, you've got Elon Musk that just comes into the business, looks at the biggest challenge that they're facing and figures out, how do we solve that challenge? So Tesla leads in battery efficiency and cost effectiveness through continuous innovation. Of course, BYD is hot on the company's heels. In fact, that's another great video to do. Tesla's business model integrates the direct-to-consumer sales and proprietary charging network. They're manufacturing and delivering directly to the consumers. And so this model outperforms competitors due to its vertical integration and a unified ecosystem for unmatched efficiency and scalability. In fact, we'll see in just a bit, I'll show you a chart that shows that Tesla has basically reduced its selling price by 50% from its high in the past. And that's part of this efficiency. Now, Tesla positions itself competitively in both premium and mass markets. Previously, when it started off, it was premium, but now it's mass market. Despite being seen as a premium brand, Tesla's innovations in manufacturing keep reducing production costs. Tesla gigafactories enable mass production of batteries and vehicles at lower cost, driving economies of scale. Plans for more affordable models indicate its ability to compete in mass market segments. And, truthfully, when you look at the how much the different models look the same, you realize part of the efficiency is, of course, that each model is so similar that they can use some interchangeable parts. Now, Tesla is synonymous with electric vehicles and innovation, holding a strong brand reputation. And Elon Musk's vision and appeal gives Tesla unmatched access to capital and, of course, as we all know, public attention. So let's recap about its competitive strategy. Tesla's brand focuses on innovation, sustainability, and high performance, and its direct-to-consumer business model enhances control over pricing and customer experience, and also means no buildup of inventory, which is the problem of all the other legacy automakers. So, but does this strategy lead to a competitive advantage? I use my world-class benchmarking scorecard to measure if a company has a competitive advantage. I developed this scorecard 10 years ago, and here's how we construct it. My team gathers the yearly and quarterly financial data of 26,000 companies worldwide. We then calculate each company's profitable growth score, which is a composite measure of both profitability and growth. After that, we rank the company relative to sector peers of similar size. A decile ranking of 1 or 2 is financially world-class, while 10 is the worst. And we assess the company's performance over the prior 4 years and the past 12 months. So, is Tesla financially world-class? Well, that's what we're going to look at. And here we can see that Tesla has been ranked as a 1 or 2 since 2021. In fact, Tesla is a perfect case study of economies of scale, where the margin of the company was very low. In fact, their operating margin was negative in the prior years, but then they were able to start to raise their volumes. And when they did, they started to have outsized levels of profit margins. So Tesla's revenue growth has consistently outperformed the global sector average. However, it's recently slowed due to market maturity, price cuts, and rising competition. In fact, what I would argue is it's hard for Tesla to have another huge revenue growth opportunity. If you just look at this particular chart, you can see that revenue growth was 83% in 2018. It was 71% in 2021. Well, it's hard now to grow a big business like Tesla, that level of growth. So I produced this chart to try to understand the revenue per vehicle and the vehicles that they've been producing. So 2024 production was about in line with prior years, and 2025 capacity is expected to be about 2.5 million vehicles. Now, in 2018, production surged due to Model 3 ramp up at Fremont factory. In 2021, there was a jump which was driven by the Giga Shanghai factory, now at maximum capacity of about 950,000 vehicles in 2021. That's actually so incredible when you think about it. And then 2025, the future, well, Gigafactory Berlin and Texas are each expected to produce 500,000 vehicles annually. But this is nothing compared to the past. When you looked at that ramp up at Fremont in 2018, when you look at that almost million vehicle volume that came from Gigafactory Shanghai in 2021, adding in another million does not drive the revenue massively like it has in the past. And I think this is a reason why the stock is questionable at this level. So does its strategy lead to a competitive advantage? The answer is yes. Clearly, Tesla has shown consistent profitable growth according to our scorecard. So what does the valuation look like? It's a good company with a great future and a lot of opportunity. Tesla is a highly active and speculative stock with significant volatility over the years. And recently there's been a sharp rise suggesting renewed bullishness. Of course, we also know that Elon Musk has been involved with the Republican Party and with Donald Trump, which is probably driving some of that. So the share price has moved considerably. Now, I use my FVMR methodology to determine the attractiveness of any company. F stands for fundamentals, so net profit margin, return on assets as examples. Let's have a look at the net margins of Tesla. We can see that net margin of Tesla is at about 16% versus GM at 6% and Ford at 3%. So Tesla is a highly profitable company for sure. And what about valuation? I look at PE and price to book, and then momentum, I look at earnings growth and change in the share price. So let's look at EPS growth for a moment. EPS CAGR from 2015 to 2023 was 27%. That's 22 points higher than the global sector average. Now, of course, there was a huge surge in 2021 thanks to that Gigafactory Shanghai ramping up. So I would argue that it's very hard to see that Tesla is going to have huge outside revenue growth and earnings growth numbers going forward. Now, of course, if they are able to deliver on the autonomous and the robo-taxis and all that, yes, it's possible. But boy, there's a long way to go for that. Now, what about risks? I look at net debt to equity and beta to look at the share risk. So let's evaluate Tesla's potential using my global stock tracker for assessing any companies or any stocks' attractiveness. Let's take a look at Tesla on my global stock tracker. Here we can see Tesla is the largest by far in market capitalization. The market capitalization of Tesla is $1.4 trillion. The closest company that comes into this competitor is Toyota. Think about, 100 years old Toyota is valued at less than 300 billion, and BYD is valued at 100 billion. Nothing beats Tesla at this point as far as size, but that also means that the company's trading on 110 times PE, a price to book of 20 times. And the price to book is real here for Tesla because they're not buying back stocks and causing their equity to go down and down and down. So right now, investors are willing to pay a premium betting on the company's long-term success in EVs, autonomous driving, and energy solutions. So remember to click the link in the description to get my global stock trader for the world's top 500 companies sent directly to your inbox every single week. And if you want to take your valuation skills to the next level, join my next Valuation Masterclass Bootcamp. So finally, to end, should you sell Tesla stock before it's too late? And my answer to that is yes, you should. I'll see you in the next video, and I look forward to hearing your comments in the comment section.